Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. I'm so glad you're here. What do we got going on in the stock market today? Not a lot. The market's kind of flat. I think the Dow's up like 13 points, right? That's a big move. The NASDAQ up about 40 points. But anyways, kind of flat today now. The S&P hanging right around that 4,300 level. Now, what a difference a week makes, right? Last week, everybody was bearish on the market. Everybody thought the market was going to crash. This week, the sentiment has shifted to bullish. All the people are starting to become bullish. This AI thing is starting to catch on. People think it's going to save the market in the upward direction. I've never seen sentiment shift so quickly in the stock market. Right now, the put to call ratio is 0.76. Now, what that means is there's 24% more calls being bought than there are puts. Now, this is a shift. It's a shift from just a week ago when there were more puts being bought. So everybody thinks the market's going higher now. I'm not one of those people, as you know, but I've been wrong. So maybe these people are correct. Maybe it's the new bull market. Maybe we hit new highs. We're not that far away from a new high, 4,700. We're at 4,300, 400 points up. We're at a new high now. I don't think we're going to get there. I do see 400 points down coming relatively soon. That's just my take. Your take may be that we hit that 4,700 level. But the VIX, it's so incredibly low. Nobody has any fear. Nobody has any fear that the market's going to come down. Everybody's convinced that we're going to continue to go up at the pace we're going up. Look at the NASDAQ already up 30% on the year, 30% in the NASDAQ. I don't see it continuing. I see it coming back in. Once again, just my take. I've been wrong, so you can point that out, and that's fine, but that's my take, is that we're coming back down. All right, let's get over to the real estate market. Now, Jeremy Siegel, he's the professor at Wharton University, right? Okay, so he comes out and he says U.S. house prices are set to slide. Now, I don't think you slide up, you slide down. That's what he goes on to say. There's a risk of house prices dropping. Now, that's fascinating, right? Now, I've been calling for that for a while. Now, we're down a little bit, down about 10% across the nation from the price Billy Bob sold. That's what we actually have come down a little, but I think we got a lot farther to go. Now, some of the comments were not very flattering to Mr. Siegel. One of the comments, anyways, it said, "I'm tired of these doom and gloom stories on the housing market. Everybody knows that home prices only go up." Now, I'm guessing that whoever wrote that comment was probably under the age of 35, because that's what house prices have been doing. They've been going up, and they believe that they can only go up because they've never seen the down market, right? Well, I'm an older guy. I've seen some down markets. Houses go up, houses come down, and they go both directions, but a lot of people have no idea what's coming to the housing market. A lot of people, I'm calling for 40% lower from here. And a lot of people will just tell me, "Mike, you're crazy. That's insane. Could never happen in my area." And I'm glad you live in that area, because it only goes up, right? All right. Well, here's what's going on. Right now, we're getting to the end of the cycle, right? We've had this big up rally, and we come down a little bit, and now we kind of have what's called like a fake dawn, if you will. We're getting a little reprieve, because nothing goes straight down. Nothing goes straight up. But this rally that we are having right now, 2 months now, is not very strong, and it's on such low volume. Now, what's happening is the purchasers now, they have lower credit quality. They're trying to be the last ones in. It's so sad. They're duping these people actually to get into the market right before it's going to collapse on them. Okay, so they're tricking them with these incentives, let's call it 1% down. Okay, you put 1% down and you'll let you get into the market. Now, you see, I think that's a trick to get the lower quality of person into the market, and they even say they're the lower quality. They say they can't make more than 80% of the income in the area to qualify for these 1% loans. And what else are they doing? Well, they're letting them have 50%. 50% debt to income ratios. That's unheard of. 30% is pretty much normal. 40% is getting a little stretch out. 45 is ridiculous. But some of these people, they're letting them go 50%. They're doing anything they can to keep this bubble alive. And so far, it's working. The bubble isn't coming down fast enough for people yet. It's staying at a high level, right? Okay, well, let's see what's going on now. Right now, people, well, they're overstretched in their mortgages, right? They can't make their mortgage payment. Now, these are the people that they jumped into the real estate market on that battle cry. Buy now, you can refinance later. Now, can you refinance later? Let's talk about that a little bit. Let's say you bought the $1 million house, right? And you put 5% down. You put $50,000 down. Okay, well, can you refinance that? Okay, because now you got a loan for $950,000. Can you go and refinance that? Well, no, you can't. You don't really have any equity in the property yet. Okay, you put your 5% down, but the rates aren't coming down. Now, a lot of people are calling for the rates to come back down. That's the real estate battle cry. That's what all the realtors are telling their purchasers to do, that you can get the lower rate, just buy now to lock in the price of the house, and then we're going to refinance later. Now, what if prices start to come down? All right, so that $1 million house is already probably down at $900,000, but let's just say that's all it drops, $900,000. Well, you got a loan for $950,000, right? So you got $50,000 of negative equity. You can't refinance when you have negative equity. And rates haven't come down yet. Okay, rates haven't come down. Now, a lot of people think they're going to come down. Once again, I'm not one of those people. Okay, so we got the Fed. The Fed coming out next week. Now, what are they going to do? Are they going to raise by a quarter point again? Are they going to pause? My take is they will probably pause. Okay, probably pause. And a lot of people think that's going to make the markets rally. That it's going to make the stock market rally. It's going to make people jump into the housing market because they feel the Fed's going to pivot and come back down to 0% interest rates again, which would put mortgage rates down 3%. So that real estate battle cry, buy now, refinance later, is going to sound really good, right? Because the Fed is going to pause. Well, my take is the Fed may pause. They may go a quarter point. My take is that they will actually pause next week. But my take is that inflation is so far from over, so far from over. Now, the government will tell you it's at 5%, and the Fed funds rate's about 5%, so they should be battling it out, right? Well, here's what they don't tell you. What the Fed's inflation rate of 5% does not take into account, it doesn't take into account food and energy. Now, if you go to the grocery store, I mean, it's ridiculous, the prices. You can almost see it week to week going up, right? I mean, I go to Costco and buy a lot at a time, and what used to be like $100 is now like $300. I mean, it's really gotten really out of hand, but food prices going up. But energy's in everything. I mean, it really is. Now, oil sitting right now about $70 a barrel, $70 a barrel. Now, my take on oil is that oil is going to go up. It's going to go up a lot. Now, OPEC, they're cutting production. I think oil's going to get above $100 again. Now, what's that going to do to inflation? It's going to make inflation go up. Now, will that make the Fed lower rates or raise rates? No, eventually the Fed's going to have to continue to raise rates. Now, this, once again, is just my take. Yours may be completely opposite. But the Fed will probably pause next week. But as inflation continues to run hot, they're calling it 5%. I think we all know on this channel that we're really probably up around whatever they say, just double it. So 5% is really up around 10%. But once you see the price of oil, and I do like oil as an investment here at around $70, I think it'll get above $100. And I think that the inflation is going to take off again. You see, inflation, it comes in waves. Now, we've had that first wave of inflation, brought us up to 9%, right? Now we're back down to what they're calling 5%. Okay, well, the second wave of inflation, when you see the oil price take off and the oil price gets up over $100, the second wave of inflation is going to come, and it's going to be above the 9%, going to be above 10%, and that's going to make the Fed, they're not going to be able to drop. They're actually going to have to restart the raises again. Now, a lot of people don't believe any of this, and that's perfectly okay. Now, I would love to see oil prices come down to $30 again. Oh, heck, let's make them negative again. They did go negative for a while there, but that's not my take. My thesis is that we're going to get high oil prices again, that we're going to get high inflation again, that the Fed's going to pause, but they're going to have to keep raising rates. But when they keep raising rates, that's going to push the mortgage rates up from the 7 to 8% that we're at now to the 9, 10, 11%. And what's that going to do to the housing market? Well, if you jumped in and going to refinance later, you're going to be in a little bit of trouble, because when the rates hit that 10, 11%, not only can you not want to refinance because you're locked in, right, at 7%, but once they hit that 10 or 11%, your house price is going to start to come down. So you're going to have higher rates and lower prices, the exact opposite of what they're telling you to do. Now, the real estate people, of course, they want you to buy. They want to get the last people in, the last suckers, if you will. These are naive buyers. These are buyers that are not well educated in the real estate market. Now, of course, people will tell you, but Mike, you're all wrong. You're the one that's not well educated. And that's perfectly fine. Everybody's entitled to their opinion. And my opinion is that houses are going to come down, that rates are going to continue to go up. Now, people go, but Mike, I'm locked in at 3%. I don't care if rates go up to 10, 15, 20% on mortgages. It's all fine. I'm locked in at 3%. Now, of course, you don't mind if your house goes what's known as underwater, right? If you have negative equity, let's say you bought your house at $1 million and it comes down to 500,000, but you're locked in at that 2.8%. So you don't care what the price of your house is. You don't care that your next door neighbor with the same square footage just sold his house for half of what you're paying your mortgage on. You don't care about stuff like that in your area. I know that, but in my area, people care about that. People are going to be dumping houses. They're going to be dumping houses really fast. And what you're also going to get is the forced selling. Look it, there's going to become this forced selling in the real estate market. It's coming from job losses. Now people go, but Mike, everybody in my area has a job. And that's great. That's great. That's fabulous. But a lot of people are losing their jobs right now. Now they come out and you say, but Mike, look at the unemployment rate. It's at 3%. Well, you know, the way they're measuring this, you know, people are losing these high-paying jobs, and so they lose this job paying $300,000, and then they go get two low-paying jobs that are paying $30,000, $40,000 each. So they went from making $200,000 down to making $70,000, but yet on the unemployment number, that counts as two jobs. So the unemployment number is coming down like this, but it's not going to work. They can finagle these numbers any way they want, but I'm telling you, there's unemployment out there. There's people that are having trouble paying their mortgage because they're stretched on their mortgage. They're stretched with their car payments. And then inflation comes in and people tell me, but Mike, doesn't inflation make assets go up? Shouldn't I be buying a house? You're welcome to. I'd love to sell you a house. But the inflation this time is not going to make the house market go up. It's going to make your food prices go up. It's going to make your gas prices go up. It's going to make people have less money, and they're going to be forced into selling their house because houses are a dead asset. People have leverage on houses. People have a mortgage to pay that they can't pay, which is going to increase the supply and make the home prices go down. Now, once again, this is just my take, and I hate scaring people on a Friday. I know that the haters will leave me a lot of comments of how I've got this all wrong, and I hope I do. Look, I hope I'm wrong. I hope houses stay up. I hope houses double from here. I'm a real estate broker. I don't want houses to go down, but do I think they will? Yeah, I do. think they'll come down by another 40%. Anyways, if you like this stuff, give me the thumbs up today. Why not? It's Friday, everybody. Get out there. Have a great weekend. I'm Tall Mike. Bye-bye now.